Hello and welcome to today's free trading video and market analysis. I'm your host, Kenny, Senior Research Analyst with the MiniAnalyst.com. The first thing we're going to look at here is a chart of the market on this Friday, the 23rd day of September, a couple of days into autumn. There we go. Looking at the December contract, 1125 is the last print. Boy, what a few days we have had in the market once we had the sell-off. What was interesting, particularly going into the FOMC, the two-day meeting, the Wednesday announcement, was that you just didn't get that obligatory drift higher into the Fed. That's what everyone had anticipated, or everyone generally anticipates, a drift higher into the Fed. And then you get the, the 1, 2, 3 action following the Fed announcement. But what was interesting is you didn't get the obligatory price action that we generally see, and that was pretty much precursor to or indicative of what we were to see, and that would be, there it is right there, a huge fall lower. Actually, we'll just bring this over a tiny bit. You see the drift lower on this Wednesday. Of course, today's Friday. There's Thursday's session, essentially just bouncing along the bottom, trying to find support was the market. But what's interesting is you got to move lower into the Fed. I mean, that was just unbelievable. So here you had this nice move down, one, the retrace, two, right back into the trend. But look at other indications. We're actually looking at a chart of our proprietary indicators. Our intraday dynamics, as we refer to them, kind of give us an idea of where the market's likely to head. Certainly red means the bears are in total control. Overwhelming bearish bias, or overwhelming red indication means extreme bearish bias, and that's kind of what we had on Wednesday, the Fed day, which was the 21st. And boy, was it a profitable session and a pretty nice session. Having said that, a lot of our portfolios have had a pullback over the last week. In fact, the MSA UDT, which had been leading, and I believe still is leading on a relative basis, had been up well over 300%, if I'm not mistaken, 340% at its equity peak. So it had a nice swing up. And now we've had a retracement. We're up to about 250%. So we've had a wonderful drawdown. And these are always the opportunities that we try and stress to prospective clients, to clients looking to add additional exposure, to get involved. If you've got a friend, you've been making a lot of money. If you've got a friend, tell them this is a great time to get involved, because we've seen a pullback in the portfolios. And every time we see these pullbacks, there are always great opportunities, or I should say, generically speaking, great opportunities to get involved on a retracement for a move back to a new equity high. You don't really want to be buying the breakout highs, although sometimes you can, and the portfolio will continue higher. Nevertheless, always look to buy low. That means add exposure, get involved in a portfolio low, and then maybe scale back on your exposure once you've had 100, 200% run. MSA UDT is up 240 to 250% over the last less than 200 days. So pretty impressive portfolio. That it is the leading portfolio, but we do have a lot of things to talk about as the market stands today. Of course, we did get the Fed news. The market completely sold off, a complete technical breakdown. We're going to look at a daily chart, which is actually more interesting. And ever since then, we had the follow through on the day following on Thursday, but we've really been trying to base out here around 1120 on the ES market. We're going to go ahead and switch over and look at the daily, but right now we're below the trend, but we have a full all-out bullish bias. So definitely the bulls are trying to hold the market here and may even be looking for a rally. Are we going to send out a free informational day trade on the ES today? Probably not. Would you be trading this? This is chop right here, and you definitely want to scale back on your exposure. Try and remain as hedged as possible during these times. There's the chart of the daily. Wow, this is the printing that we had of our triangle formation. Really interesting things going on right now. As you can see in the cash market, we have just simply come down to retest this very strong low of around 1120 in the cash. As you can see, boom, test there, boom, three tests there. Try to hold the 1140 level. We're actually back below that. Look at this trend lower. So this is pretty impressive resistance. Has served as resistance for the lion's share of today's print. 1140 not really able to get above that, so we have the downtrend, the former extension of the triangle formation. You saw the support, the former extension of the triangle formation right there. That actually was broken. That was a technical damage. We had this beautiful retest, beautiful H&S setup. Head and shoulders, there's your right shoulder. We had mentioned this shoulder. This was kind of an errant move, but we did have the extreme level of, this is for our intents and purposes, the key level of a trend following perspective that we look at is currently at 1208 in this blue line. So that's definitely held as resistance, and a beautiful move from 1220 all the way down to 1120. So a nice 100-point move to the downside in the S&Ps. Obviously, your all's general portfolios, the general long portfolios have been suffering, but that's why you need to be involved in what we do, and that is to hedge your overall portfolios for when we do have these extreme moves, because they're very likely to continue. The technical damage that's been done on the market is extreme, particularly on a monthly basis, so we definitely expect continued price movements, price depreciation, and we expect to continue to take advantage of these swings that we get in the market. We're going to look at a few things in a second. Fortunately, some of our premium models have been essentially on the sidelines. We'll get to all that in a second. Nevertheless, from a daily perspective, obviously, full all-out bearish has been the case. Our official market timing, as you know, viewing these videos, has been bearish throughout. I believe 1300 or so we went to bearish on the market. I can't remember exactly the level. It should be in the email, but definitely went bearish and have maintained bearish, and we're at the low, so all is good in terms of having a bias on the market, which is all out bearish. There you see right there from a trend following perspective, price technical perspective, chart formation perspective, be it momentum perspective, short term and intermediate term, both bearish. Directional movement perspective, all out bearish is the case. So we definitely do look, we're retesting lows. We had been wanting to retest these lows. We had been mentioning all throughout since we had to have really a break below this low. So once we saw that shallow low, once we saw this, we didn't really expect the market was actually going to be able to move higher, certainly not succumb or surmount, I should say, 1220 to 1250, which for now becomes the be-all, end-all. Should we get above those, we'll definitely have a good shot at getting back above 1300. But that's price technicals. That's looking in the future. We are seeking to gauge where the market is today, and that is lower and certainly officially bearish on the buy. So looking at the sentiment picture, we did finally yesterday, which was is a good thing. A good thing for a nice move higher. That would be nice to up to about 720. This is the mini Russell contract. Again, retesting these lows. Complete technical breakdown, so that's not good. Having said that, we did get a favorable amount of fear representative in the equity put call ratio, jumping up to about 1.5. So it's 1.5 times puts to calls, suggesting there's a prevalent amount of fear in the marketplace and definitely due for a pop. Now, when that bottom comes, obviously we're going to have to get a close above the high of the low day. Haven't really seen that. Certainly today, we're just having a resistance at the prior day's highs, as you can see on this index. Prior day's highs right there. So should we get it back above, we'll say 650, 650, 250 in the or the TF contract, definitely might look for some encouragement. Now we'd have to get two consecutive higher closes, maybe a consecutive higher close today, and then a follow through move above 655 or so on Monday would be an indication that this bottom is going to hold. But definitely, again, we do expect to break these lows, and that's kind of where we're staying right now. So looking over at the MRSEM, catching the move beautifully. This has been our star performer of the week. There you see a short at 45.30. It came down to about 80.75. So there you see a beautiful, that has really been a star performer that we've had for the week. Excuse me there 1 second. It's been just absolutely insane. So this is actually a slight derivation. We've included a stop. Now it's actually not much difference. We're going to go ahead and pull that up. So here's the one with the stop, the MRCM with the stop, $75,600 average trade net profit over the last 5 years, $75,000. Here's the one without the stop, $650. So it's about the same all in all, but you really don't want to ride this right here, which is the last trade that we had. But all in all, the max drawdown is about the same. You could trade either one you're interested in. We're actually going to tell you to stop because look over the recent level, MRCM near its equity high. So very impressive has been the MRCM. So we're moving right along. Beautiful $6,000 gain per contract in the MRSEM. Definitely has been a star performer. We're going to go ahead and minimize that. Moving right along. What are we looking at here? This is our Evo MCM. The Evo's been kind of quiet, a little bit quiet. Not really much going on. Evo TF active, unfortunately, just got hooked at the highs. of 650, and may actually get stopped out all over. We are looking at a pretty impressive inverted H&S formation. Should the 640 level hold, we'll definitely get a quick ride back to 660 to 670 is what we're anticipating. So that definitely is a particularly bullish chart formation. That, in concert with the aforementioned equity call ratio spiking up in fear, beautiful trade from 640 to 645, targeting 660 to 670. In fact, we'll put that as a free informational swing trade for you. You can go ahead and buy the market at 43.60 if you'd like, but you definitely want to be stopping below this low, which actually is 37.50. Go ahead and give it to 35. So buy from 40 to 45, stop to 35, target 660 to 670, scale out on both key levels. So the MCM hasn't been trading at all. We're going to pull that up, see what that looks like. Beautiful. $102,000, $12,000 maximum drawdown, up to 5 contracts held. This is a day trader, so you're only looking at $2,500 margin for the trading model, and that's going back over the last, again, 5 years or so, and again, at new equity highs. So we're going to go ahead and minimize that. And so here's the ESM, ES30M double X, as you can see, putting up beautiful gains already at screaming new highs. Actually just had a couple losses, one small gain, but still closed trades extremely high. You're looking at $221,000, $23,000 max drawdown. We're actually going to be able to minimize that a little bit. We're going to be able to drop that down to about, we're going to be able to put that in about half. We're actually working on a trading model now to be able to do that, to get that drawdown limited, and actually we're going to double, roughly double the average trade net profit. That's already in the works. Just don't have it right here. Again, these models are not on the website, are not in the portfolios. The Evo MCM, the ESM30, the ESM30 SL or double X. It's going to also be the R30 is going to be the one that's, you're going to double your average trade net profit. You're going to keep your profit essentially the same or close to it, and you're going to cut your maximum drawdown in half. You're going to double again your trades. So here we go, right here actually. So here is the traditional ESM30. Here's the ESM30 version double X, and as you can see, screaming to new highs. Compared to the ESM30, the traditional ESM30. So, moving right along, Evo, no, this is EVR3, I'm sorry, EVR3, definitely not really doing too much, 76,000, cut your draw down to 5,300, EVR3, not doing anything. Those are a few of the models. ISR right here, this is a new trading model. $132,000 in profit, average trade net profit $3,300. This is a swing model, $10,600. There's your equity curve over the last few years. We'll say over the last 4 years or so, 3 years and 8 months, $132,000. We were actually able to, in some of our discretionary accounts, take advantage of this short up here at around 1,200. So between that and the MRCM shorts from our a few of our discretionary accounts, made amazing money this week. So we're going to go ahead and minimize that and hope that we don't go to a black screen, but it definitely looks like we're going to. So we're going to pull up the other things that we need to look at. On the SR's website, SE Strategy Exchange, have a new addition. You know that our Swing System 5075 and Swing System 5025 have been in the leaderboard. This is the top 10 based on all-time profit, I believe, is the ranking. Those Swing System 5075 is a $5,000 account, 0025 is a $25,000 account, maximum drawdown 93%, 118% respectively. Annual profit 160%, 141%. We have a new addition though, just made it to the leaderboard, the Q Trader 20 actually, so that's pretty impressive. If we had an applause button, we would definitely do it right now. Look at that beautiful risk to reward, 4.3 risk to reward. That's pretty impressive. Not too many plus fours. There's a 4.2 with a drawdown of 120% on a $30,000 account. This is a 4.3 with a drawdown of, this is what's interesting, 75%. So if you look at all the models with an annual profit of over 100%, triple digit annual profit, excuse me, here you have right here. It has the lowest drawdown. In fact, most have even one of ours have drawdowns well exceeding 100%. Maximum drawdown for the Q Trader 20, we'll just call it Q20, to 75%. There's the equity curve right there. You can actually get involved with that portfolio through Strategy Runner, or we can actually get you involved through our website as well. But that is a Strategy Runner portfolio that we have right there, and as you can see, breaking out to new highs. And we're going to keep going. There's actually the losses that we've had this week, so it's been kind of interesting. The Master has been holding the best because it's actually hasn't lost any money, hasn't traded all week, the Master. So there you go for the 171 days. MSA UDT up 240%. That is a leader. And here's one of our Platinum Reserve portfolios that we're going to be offering. There are about 4 portfolios, maybe actually 3, a 10, a 20, and a $50,000 portfolio, and a $100,000 portfolio. So 4. If you're interested, these have never been offered. We've never offered these to the general public. Now they're going to be offering deducted 21,000 slippage, deducted 10,000 commission. You're still left with $110,000 for this. I believe this is KBR, if I'm not mistaken. Look at that, $9,000 in profit last month. $9,000. Look at the maximum drawdown. A ridiculously small 3880. The Platinum Reserve portfolios are really focused on limiting risk, limiting drawdown. You still get amazing profit, but they're really focused on limiting risk and drawdown. We seek in general high returns, but you can have high risk. Our Platinum Reserve portfolios have always been, again, designed for limited risk, more conservative, but as you can see, obviously extremely profitable. So after slippage and commissions, $110,000 over the last 8.5 years or so. So a beautiful portfolio. If you're interested in that and finding out how you can get involved with that in full automation, just write to admin at MiniAnalyst.com. We're moving right along. We did mention that below 1180 actually was a revised 1190. This was before it was revised to 1190 the day next. Below 1180, all clear for a break of the lower side of the triangle formation. And I moved to retest 1100. There you see right there. That's what we had been telling our clients. And of course, we made 1102 in just a few days. So it went from 1190 to 1102 and had been informing our clients of the anticipated move. There's a Platinum Reserve. We have a 10, 20, 50. You can actually have we actually have a $100,000 model as well. Definitely find out how you can get involved in those. Moving right along, and we have one last thing to talk about. We did mention the ESM. ESM double X actually, and we're going to pull that up right here. There you go. So here's our ESM double X. This is a quick look at the ESM double X that we just mentioned. $237,000 over the last 9 years or so. We can look at the equity curve. There's the equity graph. Again, you just saw that scream into new highs. Was ESM 30 double X. And screaming to new highs. So that's essentially, this is a program that takes all the trades and looks at them. So we're going to go back over to the performance summary. Again, $120 average trade net profit over the last 10 years, $237,000 in profit. But we're looking at a max drawdown of $30,000. That takes the worst case scenario, not the closed trades. But so here's the this is going to be the newest iteration. We're going to have an A, B, and a C. And when you combine the A, B, and the C, this is what you get right here. I'm sorry, this is actually combining A and C. So this is combining 2 of the models. This is A and C. You go from 237,000 in profit down to 216. Ouch, a little bit. 9 years. We're going to look over at the equity curve. Huge move there. Again, screaming to new highs. But what's the most interesting is, look what happens to your maximum drawdown. $30,000 down to 15, and that's intraday. That's not closed trades. It's actually probably less on closed trades basis. So you're almost making the same amount of money, $216,000, but your risk has been cut in half. We've been seeking a way to do that. We knew how to make this system better, and we've finally gotten away through through one of our partners to do that. So actually, you can now look at the average trade net profit. It goes from 120, 2,000 trades down to just 400 trades. Your average trade net profit jumps to 531. So really, just we've been looking at a way to do this. Finally, thanks to one of our partners, long-time partners, have gotten away, and we are actually over 20 minutes, so we're going to go ahead and say goodbye. If you have any questions, go to the website, chat with the support team live, shoot us an email to MiniAnalyst.com, MiniAnalyst.com, that is, and I hope you enjoyed the video. Got, again, a lot to cover, very exciting stuff. Find out how you can get involved today, and we will see you next time.